Live with the mortgage calculator. We're going to go over some live mortgage rates here today, and then we're going to talk about our deep dive topic for today, which is adjustable rate DSCR loans. So we'll wait just a couple of minutes to get started here. Let us go live on all the different platforms. We are streaming this on YouTube, Facebook, and LinkedIn, and we will wait for everybody to have a chance to jump on. We'll go ahead and put the chat up on the screen here so you can feel free to drop a comment as you tune in. We'll get started here in just a moment. Appreciate any comments you put in there. Warren, thank you for the comment. We'll get started in just a moment here. Happy Friday to everyone. Great topic here today that we have never done a show on, actually. So we've never actually done a deep dive here into adjustable rate DSCR loans. So this will be a great opportunity to talk about something that we don't talk about much. All right. It looks like we are live on all the different platforms, so we can go ahead and get started. We will take the chat off the screen, but feel free to keep dropping comments as you tune in and drop any questions you have about our deep dive topic today as well. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey. Today, we're going to go through some live mortgage rates. We do this at 11 a.m. Eastern every day, and we also do a different. And today's deep dive is going to be adjustable rate DSCR loans. So I'll go ahead and turn it over to Nick here. Before we do our deep dive, we'll pull up some live mortgage rates of different programs. So Nick, if you're ready, let's pull up the pricing tool and we will see what the market is looking like this morning.
All right, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR. For today, it is September 29th, just after 11 a.m. Eastern. So we should have live rates for most of our standard programs. If you'd like a full loan estimate that breaks down all of the different fees that go into the APR, please get with one of our loan officers. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our DSCR topic for today in 44 states total. So for today's demo, we're going to set up a loan scenario, standard loan to compare across the programs. We'll set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. And we're going to check out our different programs. We're going to start with conforming conventional, then we'll go into FHA, and then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs. We also have VA and USDA. VA is only for our eligible vets and active service members. If you are eligible, we can quote it in a couple clicks. And USDA is only for our eligible properties that are in a USDA area. If you do happen to be shopping there, let us know. We can quote it up, no problem. So we'll start with conforming. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, let's check out the conventional rates this morning. So it's a touchdown, so that's always good. We love downward momentum. So the last few shows, due to news, hasn't been so good. But today we have a little bit of downward momentum here. So 7.499 rate, 0.75 discount points and costs. Final APR is 7.657. So that's good. We love when things are trending down. Now, if our customer doesn't qualify for a conventional program for any reason, typically the next option we want to pull up is an FHA option. So we'll put everything exactly the same. And this time we'll select FHA. FHA does allow a little more leniency on credit events, as well as a much higher debt to income ratio. So typically it allows our borrowers to qualify a little easier. So let's check out the FHA options today. I think that's about the same as yesterday. Hopefully FHA comes down a little bit as well later today. 6.75 rate, 0.66 discount points in cost, puts the final APR at 7.331 for the best option here. So still a little bit cheaper than conventional. That's about 0.3 cheaper than conventional if our customer qualifies for both, even including the mortgage insurance that is required for FHA. So great option for our customers that qualify for both. Definitely check out FHA as well. Might save you a little bit of money. And our customers that have to use it, definitely very cool changes that they've added. Now, if our customer doesn't qualify for conventional or FHA for any reason, that's where we specialize here at the Mortgage Calculator. Most other banks or lenders will have to deny that customer. But fortunately, we have over 5,000 additional options under expanded guidelines, also known as non-QM. So we'll set everything up the same as the other demos. However, for non-QM, a new option pops up for income. Full doc is what we use for conventional and FHA. That's 2 years of tax returns. So typically we'll choose non-QM to take advantage of a different option, such as asset-related, business bank statement. Our investor options are only for investment properties. We'll talk about that shortly. Business bank statement, 12-month, most popular program by far. We also have RSU, stated, VOE, 1099, P&L, no income CDFI, all kinds of options. But the most popular for the demo is going to be our 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may have trouble qualifying, or just may not quite get enough income to get that home they really want. So we solve their problem here by using no tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in this example, using just the cash in the bank. No tax returns, so most of our self-employed borrowers qualify for double or more using this method of calculation. So let's check out the bank statement options today. Oof, right there, I think we're almost identical again. It's pretty amazing that we can have bank statement options for almost identical price to conventional here. So best option at the top, 7.5 rate, a little bit more cost here, 3.25 cost, but it puts our final APR at 7.642, which is right there with conventional at the moment. And you notice we have hundreds of different options here that use bank statements. Some of these have a little bit higher rates and costs, may allow bankruptcies, foreclosures, other credit events, also may allow us to calculate the income differently. So tons of different options. Please get with our team. They'll find which program will work for you. And for our final few demos, we always do live pricing for investment properties. So we love to work with investors, first-time investors, seasoned investors. We have tons of different options. So we'll set up the same scenario, 400,000 loan amount, 80% loan to value, 20% down payment, and we'll compare our investment options. We'll check out our conforming conventional programs, and we'll check out our non-QM programs. Remember, the government programs, FHA, VA, USDA, they do not work for investments. So we'll select conforming conventional first. We'll keep everything exactly the same as all our other demos. All we've changed here is the occupancy to investment. So this will show us the adjustments that conventional has made for an investment. Again, with the rates crazy, for some reason, non-QM options popping up, but this is the best conventional option here at the top. 7.875 rate, 2.875 discount points and costs, somewhat reasonable compared to what we've seen a lot lately. But that puts our final APR at 8.104. So good option for our customers that want to use conventional. However, most investor customers ask for a little bit higher rate as long as their property cash flows in order to reduce these discount points. $11,500 is a lot of money. Most investors would rather spend elsewhere if they could do so. So most investors ask for other options. That's where we love to present our non-QM options. So for the final demo here, we'll set up the same scenario, 80% loan to value, 20% down payment, investment property, and this time we'll choose expanded guidelines, also known as non-QM. So the first thing we need to select for non-QM investment property is the income, and the most popular option is our DSCR option, which is also our topic for today. That's because it doesn't require any income or employment from our borrower. We're just using the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the expenses of the mortgage, the PITIA, aka the property cash flows monthly, that's a ratio of 1.0 or higher. We also have options for ratios under 1.0 where the property may not cash flow monthly. For the demo, we always put 1.5, which is the highest value, so that we can see all the different programs. And the final thing we must select is a prepayment penalty. 3 years is standard for these programs. We can select 0, that will limit what shows up and cost more. And we could also select 5, which will again limit what shows up, but does save our customers some money if those programs are for them. Most common though is 3 years, so that's what we use for our demo here. So let's check out our DSCR options this morning. All right, best option here at the top, 8.25 rate, 0.85 discount points and cost. So obviously our investor clients are happy here with this cost. And the final APR of 8.312. So you see here a DSCR almost identical to conventional. It was 8.1 something for conventional, and a lot of them were up over 8.2. So we can get a DSCR option for almost the same rate. And if we add a 5-year prepay, I guarantee we can beat a conventional option today. So pretty cool that DSCR is beating conventional. I'd say 100% of investors will choose a DSCR option that will beat conventional. And if they're the same price or within the same ballpark as they are right here, I would say 90+% of investors will choose a DSCR option. Tons of flexibility there. You can do 1, 2, 5, 10 loans at a time to refinance multiple properties, buy multiple properties. Tons of flexibility and no income or employment. And if we scroll down here, we have dozens of different versions of these programs. Some of these may allow bankruptcies, foreclosures, obviously a little bit higher rates and costs there. Some of these may allow short-term rental income, also sometimes a little bit higher rates and costs there. And to segue into our topic for today, some of these DSCR programs do allow for ARMs in order to add some flexibility. So notice these are all 30-year fixed programs, which is what we always do for our live demo. However, let me change my screen and we will check out some options for today. So since Jose is gone, he has set up some options for us to review. So I'm covering for him today. So let me go ahead and pull up my screen. I won't be able to pull up my fancy graphic, so I'll just get right into it. The demos that Jose has sent us for today for adjustable rate mortgages for specifically DSCR. So we have some very cool options for DSCR ARMs, products that you can't get for conventional. Obviously, these are quasi-commercial products. So a lot of cool flexibility that we have. So Jose's highlighted a few cool options here. Remember, ARMs are adjustable rate mortgages. Typically, the total term will be 30 years, but it's going to adjust throughout. So we have some options here for 5-year fixed initial term, and then it's going to adjust typically every 6 months after that. We have an option for 7-year fixed initial terms, which you'll see here in a second for our DSCR. Then we have an option that probably most of you have never heard of. And for those on our team, make sure you click those special buttons in our system to pull this one up. But we have a 6-month ARM for DSCR. Very unique. Obviously, it's only going to give you a teaser rate or the fixed intro rate for the first 6 months and then adjust every 6 months after. But a little bit of flexibility there for our investors that love to get creative. So let me go ahead and share my screen here with the quotes. All right, so we're starting here with Jose's first example. Was the lowest down payment example that we have for an ARM. So we have a 5-year fixed ARM, pretty standard ARM product for 15% down. Is only going to be for 1-unit properties for the DSCR. So scroll down here, we got some good options. You see his sample purchase price was $500,000, so 15% down is $75,000. And the rates here, obviously this is the lowest option we have. So the rates vary from 8.99 is the lowest rate we can buy it down to for 13,000 in points. And the closest to par rate we have for this special option would be a 10.125 for looks like just about 1 point there in cost. So this is a good option for those investors looking to save down payment. I would definitely compare it to a 30-year fixed as well, which is right about the same. So definitely compare those side by side when you're comparing them, but great options for our investors that want some flexibility. Now, the next option that Jose had here was the more standard 5-year fixed arm DSCR, 1 unit with 20% down. So this is a more standard option. Obviously, 15% down is as low as it goes anywhere. And this is a more standard investment option. Now we have a par rate. Now we have a much lower rate table here. So standard 20% down on a 500,000 purchase would be 100,000 down. So this is a 400,000 loan amount. And we actually have a rate here, 8.625 is the closest to par. It's actually giving us $600 lender credit there. So great option. And we can buy it all the way down to 7.625 rate for, looks like a little, right around 2.5 points there. Now we have our 5-year fixed arm, 40-year AM DSCR 20% down. So this is where we start getting tricky, right? Where we're layering different features. So we talked earlier this week about the 40-year feature we can add. Typically, not all programs allow it, but it's an adjustment. Now we're talking about adding an arm feature, which sometimes costs more, sometimes saves money. So usually it costs a little bit more, but has a little bit lower rate table. So here we have a good option for, again, 20% down. So 500,000 purchase, 100,000 down. And the lowest cost option, closest to par here, is 9.49 rate for $900 in cost. And our lowest point we can buy it down to here is 7.999 for 13,900 in points cost. And those are some of our tricky options there for the 5-year. It's probably about as tricky as it gets. Now we will check out the one I mentioned before, which is our 6-month arm. So this is very unique. Most of you have probably never seen this product before out there in our team. It's definitely unique. You have to press the right buttons to get this to show up. And this also doesn't have a prepayment penalty. So a lot of times we want to add prepayment penalties to get the more interesting, flexible products. However, this one doesn't. So that's why a lot of people don't see this one pop up. So 6-month arm, DSCR, it's going to adjust every 6 months after the first 6 months, obviously. 20% down, but look at these smoking rates, beating conventional by a long shot, almost a whole point we're going to beat conventional by here. But remember, it's only for those first 6 months. So this is a 20% down DSCR option. 500,000 purchase would be 100,000 down, so a 400,000 loan amount. And the closest to par option we have is 7.25 rate for just a little bit of cost there, $400. And we can buy it all the way down to 6.375. Absolutely amazing, blowing conventional out of the water. And it looks like it's just over 2 points there in cost for that amazing rate. And this is no prepay also. So very cool option we have here using the very interesting 6-month ARM DSCR option. And here we'll go into a 7-year option. So this is also more of a traditional 7-year ARM. So 7 years of fixed and then adjusts every 6 months. Pretty standard. 20% down DSCR here. Pretty much the same as the other options. The 5-year 8.625 rate has a little bit of a lender credit, $100 here, and a 7.5 rate is the lowest we can buy it down here, and just about 2.5 points in cost. And another cool option for the 6-month ARM. Let's check out a cash out. 6-month ARM, DSCR, 1 unit, cash out is going to be a 75 LTV max. So again, absolutely smoking rates, going to blow conventional out of the water for the first 6 months at least, right? Remember, always caution our customers there that it is going to adjust after 6 months to a much higher rate, more standard. But here, 500,000 appraisal, 75 LTV would be a 375,000 loan amount. So the best cost option here, closest to par, 7.5 rate, just costing $375. And the lowest we can buy it down here is 6.375. And that's just about 2 points in cost there, 9,750. So great option for our investors that want to get flexible and go for those amazing introductory rates. And let's check out a more standard 5-year ARM DSCR 1 unit, 75 LTV cash out refi, more standard program here. And for this one, we have 8.375 rate is our lowest cost option for $1,300. And the lowest buy down, 7.75 rate for looks like about 2.5 points there in cost. And finally, again, a more traditional cash out refi with the 7-year ARM, 1 unit, 75 LTV, again, is going to be our cash out max for the DSCR. And very similar rates here, a little bit lower. It looks like 8.5 rate is costing $375. And the lowest buy down here, 7.75 rate, is going to cost us quite a bit there, almost 3 points there. So good options here that we have for ARMs. Definitely adds some flexibility to the situation for our investors out there looking to get tricky, looking to perhaps capture some low interest for a shorter period of time, maybe not planning on holding the property forever there.
All right, great topic there. I actually can't see the chat here, Nick. Was there any questions in the chat?
Have one from our team there. Owen, yes, just make sure you click the 6-month option. Most people click the 5 and 7, I believe, is the default options for when you're quoting. So Owen was asking where he clicks the option that I mentioned. So there is a 6-month option, just like all our quotes, right? You can just click the different options. Just make sure to check out that 6-month option. And remember, the 6-month version doesn't allow a prepay. So that program, you have to remove the prepay as well to get that one to pop up. But yeah, that's more of an internal question there. So I think we're good here, Kyle.
All right, perfect. Well, remember, we do this show 11 a.m. Eastern every morning where we go through the live rates and then do a deep dive into a different topic every day. We will be back here Monday with a new topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, everyone, for tuning in. And we'll see you on Monday, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everybody.
Thanks, everybody.